The Consumer Bankers Association is pleased to welcome you to today's presentation, The Changing Climate for Consumer Reporting and Disputes, Where Do We Go From Here?, presented by Bridgeforce. My name is Sandy, and it's my pleasure to be the facilitator for today's event. I'd like to formally welcome the participants who are joining us today. Please note that today's call is being recorded, and all participant lines will be muted during this broadcast. If you are listening to the program over the phone and you need assistance at any time, please press *0 and an operator will assist you. If you're experiencing technical difficulties with the web portion of today's program, please email cba@compartners.com or send a message in the chat box. This presentation will last up to 60 minutes and will include question and answer opportunities during the program and at the end. You can submit a question at any time by typing into the chat box in the lower left corner of the screen, and then be sure to click on the send button. In addition, this presentation will contain live polling questions. When a poll appears on your screen, simply click on the slide in the box next to the answer of your choice. Your answers are not viewable by the other attendees. I'd like to direct your attention to the links box located to the left of the screen where Bridgeforce's website is located for you to view. Simply click on the link and a separate web browser window will open, and this will not interfere with your viewing of the presentation. It's now my pleasure to introduce today's speakers, Matt Scarborough and Michelle McCartney. Matt Scarborough is CEO of Bridgeforce. As CEO, Matt has led Bridgeforce to new levels of client services, expanding resources to both broaden and deepen company capabilities. Over the years, Matt has expanded the Bridgeforce reach, adding business segments and geographies to the company portfolio and greatly increasing the scope of problem solving and plan implementation services the company can provide for any individual client. As part of these efforts, Matt has helped clients with challenges such as credit policy, organizational realignment, business processes, portfolio management, collections and recovery operations, interfacing with capital markets, and managing the regulatory environment. Michelle McCartney is Managing Director, U.S. Banking Practice at Bridgeforce. She has over 30 years of experience in the financial services industry with a deep understanding of regulatory compliance and project management. She has extensive experience managing the development and delivery of software and analytics products in support of consumer and small business lending. In her capacity with Bridgeforce, Michelle has established and managed the project management office functions for some of their largest U.S. engagements focused on mission-critical regulatory compliance and operational improvements. She continues to be heavily involved in the field of consumer reporting management and recently has led consumer reporting compliance ventures to help clients quickly satisfy regulatory accuracy and integrity expectations. Michelle and Matt, welcome to the program.
Great. Well, thank you very much. Appreciate the introductions and setting everything up. So I'll go ahead. I'll kick us off and get things started, and then hand over to Michelle here in just a little bit. So first, to kick off on the agenda, we'll give a bit of introductions to Bridgeforce and a bit of background on some of the sorts of things that we have worked on with clients in this space. Then an update into what we're seeing in the regulatory and compliance environment. I'll then hand off to Michelle to walk through some of the emerging trends and hot topics, as well as to show one of the tools that we're very proud of, the Bridgeforce Data Quality Scanner, and some of the things we've learned from it, and then roll into a question and answer. So with that very brief background on Bridgeforce as a company, I saw from the registrations a good number of existing clients out there, so I know a number of you are familiar with this. But for those that are not, we're a very specialized management consulting company where everything we do is focused upon consumer and small business banking in its various forms, and really overwhelmingly around consumer business lending and payments. And we're structured different than most firms. So the vast majority of our colleagues are folks that joined us after having had a substantial part of their banking industry. And you come to us after 1, 2, 3 decades pretty commonly of having been in and around various institutions before joining Bridgeforce. So with this, we've had the opportunity within this particular topic, certainly, as we've seen it spread across from our large bank clients on through a variety of different sorts of entities that we work with. And just to give a little bit more background, I think it's always helpful when listening to any person or group speak to have a sense of where they're coming from, because obviously our experiences will influence what we have to say and what we're thinking. So, what we've done, we've really found that credit bureau related practices in all of its various ways, so the furnishing, the handling of disputes, the usage, and all of the things with this, ranging from the very high-level enterprise policy on through the efforts to implement that involve all sorts of processes, technology, etc. This theme has been the single most consistent and common area of need among our large clients. And so we've really done, I won't take us through each bullet point on here, but we have addressed these issues from a variety of angles, and everything ranging from the very sort of conceptual and policy and setting organizational structures and those sorts of things, down to the deep in the weed details of trying to map from systems of record over to the Metro 2 files and helping to make sure that the data quality of those Metro 2 files that we're sending out is appropriate, etc. And in terms of the entities we've done it with, we certainly saw the attention on these issues first come among our very large bank clients, but then over time it's become rather universal, where on this we have engaged not only with the large banks, but also with smaller banks, credit unions, and a variety of non-bank lenders and even processors, as now the importance of this for the entire ecosystem has become very clear. The regulatory scrutiny upon participants in all sorts of roles has become very clear. So this has been a topic of relatively universal interest and relatively universal projects for us across the different areas. So before we dive on, just to get a sense from folks here, so that would be our first poll question, to get a sense from those of you on the phone as you look at things over the last 12 months, how does this feel for you in terms of less effort, about the same, or more effort going into reporting than it was? And I'm seeing, and I can't say I'm terribly surprised, quite a lot of responses pour in, and seeing the general theme of this is getting a lot more attention than it was a year ago. So no surprises there, and thank you, everyone. I'll give a little bit longer as the responses come in, but I'm going to guess that the trend on this will stay pretty solid. And certainly thank you all, as I'm seeing a very good participation rate among the folks here that are on the phone with us. Okay, so thank you for those that have a chance to participate. Quite clearly what we're seeing is I'm showing here 94% of those that have responded that are saying that this is getting more effort than it was a year ago. Only about 6% saying it's about the same, and precisely no one saying less. So I think no surprises there, but certainly drives home the point of what we are seeing in the level of attention on all of these sorts of issues. So related question, as we look on thinking about it from a topic area of, for your organization, and this will help us as we make sure we spend the time and on the things most relevant to this audience, of where are you seeing the greater level of attention on reporting, on disputes, or do you feel it's relatively even? And so I'll give a few moments for folks to respond on this, and thank you again, as I'm already seeing very good participation. Okay. Great. So as these roll in, clearly the number one response by a pretty good margin is a lot of attention on each, and to the extent there is a little bit of a difference, a bit greater on reporting. So that's great. We will, and that's not surprising. I would say that reporting, as we watched it ripple through some of our clients, was often, if there was a difference, it was the one getting some of the attention first. And, well, so many disputes ultimately come back to things that if we can fix it on the reporting side at the front end, it can make the dispute never happen. So, all right. Well, then, thank you. And let me move in then to the regulatory and compliance update. So quick caveat and note before diving into this. So I'll walk through the implications of what we're seeing in the environment, including a few specific court cases. I am not an attorney. Bridgeforce, Inc. is not a law firm. I did notice we've got a number of attorneys that have joined us today. And so I'll let you know also that what I am about to present is a condensed version of something that our friends over at Bridgeforce Law put together, that we engage with them regularly to help us digging into the environment, and they had put together some more lengthy education around some of these issues and how we're seeing the environment evolve. And if anyone would like a deeper dive to have the attorney-to-attorney conversations, please just let us know. I'd be happy to make those introductions. So with that, I'll say the theme is just fit in these 3 bullets, and the first one I think will be no surprise to anyone on this phone, that the CFPB has certainly raised expectations for accuracy across the industry. Then the next couple bullets and how they work together with the first is a key point, particularly when thinking about disputes. So the fact that the CRAs now accept a much greater level of documentation from consumers than they used to and pass those along to furnishers has created a greater amount of information that furnishers have available to work with when trying to sort through a dispute. And with that, and multiple court decisions, we'll zero in on just a few for today, but a large number of court decisions have consistently found that increased information greatly raises the duty for a reasonable investigation. And I can't emphasize that enough. It's moved so far that what would have been industry standard just a few years ago has now been found to be willfully negligent. And so that how much of a sea change has happened here is quite striking, and we'll talk through that here over the next few slides. So first, before diving into the cases, a brief overview on some of the CFPB actions that have been raising pressure. So obviously they started back in 2012 by beginning to supervise the large participants in the credit reporting industry and coming and looking at them directly. And then with that next step that we referenced here a moment ago, when the big CRAs started allowing much greater levels of documentation to be provided by the consumers, and so that gave much more to work with. And then, of course, the continued scrutiny, and with that, the CFPB has been publishing bulletins on what they're expecting folks to do with it, and putting out those requirements, as well as monitoring, of course, the complaints and things related to it. And it's really the impact of this nexus of what the CFPB has done and what the court decisions have done is the key point I'd want to drive in terms of thinking about the changes in the world around us on disputes. So there's a number of cases out there. The Boggio case here is one I'll draw attention to that hits this idea about what's a reasonable investigation, and that the information, I'll call attention to within that quote where it points out that the information provided by the CRA can affect the scope of the investigation required, right? So the definition of reasonable depends on what you have to work with. If we were to go back a decade ago, it would have been very common for a furnisher to only get a 3-digit code when a dispute comes, and that 3-digit code, a good portion of the time, was simply a code that meant other. So there was virtually no information, and therefore there's not a lot of investigation you can do if you've got that little information through the CRA, and then you may not, depending upon how much information you have within your own systems, to tell you about it. That has changed. It's changed rather dramatically. I'll combine that with the point out of the next case, and this one, in this case, directly contradicted some decisions that had been made years earlier, and this laid out the need to conduct a searching inquiry. And the idea here, the key sort of business point, is that even if the information provided in the dispute itself is not enough to provide a good investigation, if you have data on that consumer that does enable you to do the investigation, then you still need to do so. And so even if their dispute wasn't so good, but you go and take a look and say, well, we have a lot of information on this person through their account history, they're an existing customer, we know when they actually fell delinquent, we know when we actually got their payments, and therefore we should be able to look and see if this is accurate. So that although the increase in information provided through the CRAs does greatly affect what is now the definition of reasonable for that investigation, it's not contained only to that information. We have to look at what did we have available. So they didn't go so far as to require looking out to any external sources, but in terms of what you already have available for your internal sources, it put forward and the idea of the searching investigation. This next one was a bit surprising, where here the court went so far looking at, in this case, the person had already had a dispute under one section of the FCRA, but then did it under another. So in this case, where you got the direct disputes and the indirect disputes coming through different sections of the Act, and so here that the precise dispute had already been looked at and dealt with by the institution, and so when it came back again, but this time through a different channel, they dismissed it, saying, well, we don't need to look at it because we've already investigated this. And unfortunately, the court found in this case that that's not okay, and that even though you had investigated it once, you had investigated when it was direct, when it came in indirect, that you didn't have the ability to just immediately dismiss it as frivolous. So, that's a ruling that, if I'm candidly honest, struck me as a little surprising. I think the previous two we were talking through fit within a fairly consistent and coherent pattern. This one is a little bit of an outlier, but nonetheless, it's out there, and it was a relatively recent decision. So, we'll roll in here to, as we move over to Michelle's section on some of the other trends we're seeing. How are people dealing with this? How do we work with it? But we wanted to make sure to raise everyone's awareness on the sea change that's happened within the dispute side, because in this case, it's not only about keeping the CFPB happy. That's obviously very important. We want to make sure we are meeting regulatory expectations. But here, the confluence of what the CFPB has done and what the court decisions are put us in a place that you could potentially be open to very significant civil liabilities, if not evolving the way that we handle disputes in a very significant way. So we'll be happy to take some of the Q&A on that later, but for now I'll go ahead and pass the baton over to Michelle for her to start to take us into the emerging trends and topics.
Thank you, Matt. So now that we have armed you a bit, if you will, with some knowledge about regulatory and legal precedents, let's talk about how this translates into expectations for how furnishers manage their consumer reporting and dispute operations. At Bridgeforce, we tend to segment the world of consumer reporting compliance into three primary groups: reporting, or the act of furnishing of data; disputes management; and usage, meaning the consumption of consumer and other reports. For today, we're focusing on reporting and disputes. Now, admittedly, there's quite a lot of content on this slide, and I'm not going to go through all of these one by one, so I just want to zero in on a few points. Expectations around reporting include ensuring that you have compliant reporting across the enterprise, which really means to ensure that all groups within your organization who are furnishing data to consumer reporting agencies are doing so in a manner that supports the requisite regulations, and also includes controls in place to ensure that this is happening consistently throughout the organization. In support of an objective of reporting accurate data, furnishers are also expected to perform validation of data in multiple places throughout what I'll refer to as the journey of your data in the furnishing process. I'll speak more to multiple stage validation a bit later. Looking to disputes expectations, obviously there's SLAs in place that you need to ensure you are meeting, and that means you need to have processes and controls in place to satisfy those SLAs and resolve disputes appropriately, which to us means work to address the customer's true concerns and really resolve the issue at hand. Also for disputes, there's an expectation that you're monitoring disputes for trends and performing adequate root cause analysis. Root cause analysis is really a key ingredient to uncovering and remediating any systemic issues that could be contributing to repeated reporting errors and recurring disputes. Now, a few more questions for you. We'd like to understand how your disputes operations are structured within your organization. So we ask that you select the response that pertains to your organization. Just to clarify, the first one is if each of your business lines and or source systems has its own group to handle disputes and kind of essentially does their own thing. If you have a centralized organization that manages disputes for the full enterprise, you'd select number 2. If you have some aggregation, perhaps some business lines work within a single unit, but there's still multiple dispute operations across the enterprise. And select number 4D if each of your business lines and or source systems has its own group, yet you have established perhaps a single oversight or governance group across the enterprise. So I'll give it another minute here and see how it comes in. Looks like it's somewhat even across A, B, C, D. D's creeping up a little bit. Okay. And again, appreciate everybody who is taking time to zero in on this. Okay. All right, so before I comment on the answer on this one and appreciate everybody's response, in a similar way, we're going to go ahead and move to a very similar question, which is think about your reporting processes now. So therefore, the operations engaged in furnishing data to various consumer reporting agencies. And the responses here are similar. Do you have one owner for each individual business line, one owner who has centralized control across the enterprise, some consolidation but still multiple processes, or do you have each business line kind of doing their own thing but under the oversight of perhaps a centralized governance structure? Okay. Looks like some similarities to the dispute responses. So as we see some remaining responses come in, I'm not surprised. I think what this is telling us is a couple things. One, we're seeing a bit more distribution in terms of what different entities are doing. This is consistent with what I've observed in the industry. But we're starting to see that move towards some centralization, some control. So why is this important? Well, consistency is a really critical consideration across the enterprise. And we are seeing more organizations move to centralized reporting and dispute operations, or at a minimum, moving to establish centralized governance organizations that take responsibility to define standards for all business lines and groups. Now, if you answered number 1 for one or both of these, indicating that your disputes and or reporting processes are largely decentralized, then I'd suggest just think about, is there an opportunity to move your organization into the B or D responses to achieve more consistency across the enterprise? Now I'm going to hit on a few what we refer to as hot topics on this and the next slide, focusing first on disputes and then on reporting. These hot topics come about from the work we've done in the industry where we have seen focus by the CFPB in particular, but also just some areas of concern from individuals that we've worked with. Now, it's no surprise that the evolution of the CFPB complaint database has brought a spotlight to consumer reporting disputes. So some of the hot topic areas that we tend to see, first one circles around procedures. You want to ensure, do you have documented procedures with defined controls? And examine those for tone. How well do your procedures portray you in terms of how you serve your customers? Does your documentation, for example, contain a list of reasons why you might dismiss a dispute? Or do they instead represent your focus on excellent customer service and doing everything you can to resolve a dispute for a customer? In examining your documentation, we suggest take a close look at your definitions for frivolous disputes. Matt touched on this a little bit. A best practice really would be to consider investigating every dispute. Another hot topic is look at how your staff approaches investigations and identify, are there any operational constraints that could hinder the investigation, meaning quotas for productivity. So what are people doing who are considered to be really succeeding in how they're managing disputes? The first one ties into something I noted earlier, so I'll just repeat it very quickly, which is root cause analysis. This is really critical and really key to helping you understand why you keep incurring disputes and goes to also improving accuracy of your reporting data. Consider how you interact with your customers today regarding a dispute. Is everything done simply with a mailed letter? We suggest that direct outreach with a phone call to clarify the dispute and obtain information to support the investigation could go a long way. Another key to success in this area is the training of your staff who are performing the disputes resolution process. Do they understand FCRA requirements and the implications of how they resolve disputes? Do you consistently execute audits on a routine basis to confirm that your dispute resolutions are sustained and errors are not reintroduced? Now, moving to a similar approach on reporting, consumer reporting accuracy has been cited as a top priority by the CFPB. Some of the hot topics that we zero in on, really in the interest of data accuracy, is validation. Validation of your data that you're furnishing to the CRAs is critically important. I've probably mentioned this once or twice already, and I'm probably going to sound like a broken record by the time we're done today. And I'll come back to our recommended approach on this in just a few more minutes. Other areas that receive attention. There are a lot of complex account statuses that you need to handle, particularly in the collections and recovery area, such as foreclosures, bankruptcies, repossessions, etc. These are areas that regulatory examiners know are prone to errors, and thus where they will quickly focus their examination attention. We have a bullet point here around inconsistencies in reporting special comment codes, and note there's been a lot of scrutiny on student loans. And it was just late last week that the U.S. Department of Education announced a new initiative in coordination with the Department of Treasury and CFPB to modernize the way student loans appear on borrowers' credit reports and develop guidance to ensure that credit reporting for student loans fairly, consistently, and accurately reflects repayment activity. While this focuses on student loans, that goal of ensuring everything is reported fairly, consistently, and accurately really applies to all the data that you're furnishing. So how do you succeed? Document, document, document. Policies, procedures, and process maps are really key to capturing what you're doing and ensuring procedures are being executed appropriately. Know how you are producing the data that you're submitting to any consumer reporting agency in the form of documentation that maps out each data element. This will go a long way toward addressing those complex reporting account statuses as well. I mentioned training on the last page. Want to mention it here again. It's so critically important that your staff is well trained, not only for the first line of business who may be performing some reviews of your data before you send it to the CRAs, but all lines of defense, including your auditors, so that they can provide a credible challenge back to the business lines when conducting an audit. And you yourself, who are responsible for furnishing, should conduct regularly scheduled audits of your furnishing file production process. I'll wrap this slide up by asking you to ask yourself this question. If an examiner walks in the door tomorrow, do you think you have all of the necessary documentation regarding your current processes, controls, validation, and audit routines, and those checks in place to ensure you're actually executing against all of those? So continuing with the theme of data accuracy, one more poll for you today. We'd like to hear from you. What tools and processes are you using to enhance the accuracy of your reporting? This is a multiple choice, so please select all that apply. Disputes root cause analysis, use of the monthly reject and error reports from the CRAs. Perhaps you do annual CRA audits, any automated data validation routines, or none of the above. So I'm very pleased to see no one has selected the last option. So, whoops, we do have one that just selected the last option, and it went away. Okay. So obviously, looks like a lot of you are using disputes root cause analysis pretty evenly in terms of the first three, with the root cause analysis and the interactions with the error reports and audits, and a little bit less on the data validation routines. So, and again, happy to see no one replied none of the above, because doing something obviously is critically important. So as you reflect on these results and see what others are doing, the real question to ask yourself here is this: how proactive is your organization with preventive controls to ensure accuracy in the data that you are furnishing to CRAs? And it's important for me to point out, I'm using my words very carefully. When I say CRAs, I'm referring to consumer reporting agencies, and that is inclusive of more than just the traditional credit bureaus to whom you furnish Metro 2 files. A number of you are furnishing data to other CRAs, perhaps on checking accounts, fraud results, things like that that constitute consumer data going out to an entity that is a consumer reporting agency. All of these guidelines that we're speaking to around the importance of validating your data applies to all of those. So now I want to spend a few minutes reviewing with you a tool that Bridgeforce developed to support furnishers in the goal of furnishing data accurately to the CRAs, which we refer to as the Data Quality Scanner. This is a tool that we developed at Bridgeforce really selfishly to help ourselves first. We were finding ourselves spending quite a bit of labor-intensive time doing manual audits on Metro 2 files and in conjunction with reviewing our client source systems that generate those files, and said, hey, there's got to be a better way. And so we produced this tool that automates over 250 rules as of today and continues to grow in terms of the database that we developed to evaluate Metro 2 files against both Metro 2 reporting requirements as well as some FCRA and Reg V compliance considerations. Through this automation, we're able to perform a full file review that a manual review just cannot feasibly perform. In the context of a compliance management system, it fulfills both preventive and detective control needs. And some of the output that you'll see also supports a trending view, which provides a good MIS tool for seeing how are you progressing 1 month over the next in terms of improving the accuracy of the files that you're providing. Quick review of how it works. Typically, the application is installed in a central location, such as a server. Multiple source system files from multiple Metro 2 files from multiple source systems can be dropped into the single location where the data quality scanner is installed. And all those files then are processed against the 250-plus rule database. The output is in the form of a set of dashboards, which I'm going to show to you here momentarily, which is really easy for business users to understand what's going on with their data. We also make the output available in a comma delimited text file that some of our clients use to import into tools like Excel or Access and then marry with data from their source system to advance their troubleshooting needs. So I am going to go ahead and click over, and everybody should now see the main dashboard of the Tableau workbook that we produced out of the Data Quality Scanner. Now I'm just going to really run through this quickly. Happy to delve into it in more detail offline for anybody who's interested, but really just want to share with you one approach to performing detailed data validation of your Metro 2 files. So on the main dashboard, the obligatory summary of what we processed in the forms of how many accounts per segment in the Metro 2 file, how many accounts triggered one or more of our rules. Below that, we start to break down, well, where were those discrepancies in terms of the types of rules that were triggered? This presents it in the form of categories, so I'm not going to spend time here. I'm going to jump into more detail in the next dashboard on this one. We also provide a breakdown in this upper right corner of the discrepancies by impact. So we have evaluated each rule in DQS and assigned an impact level of high, medium, and low. While this is a judgment on Bridgeforce's part, the high impact is really intended to highlight conditions that, if they exist in the Metro 2 file, could in fact cause consumer harm if the data is processed as is and posted to a consumer's file at the credit bureaus. So things like critical date fields, certain amount fields, things that could impact score calculations at the bureaus or, again, otherwise negatively impact the total report on a consumer. Are those that we rate as high. Medium may also have a little bit of consumer impact, but not as severe as high. And the low impact tend to be more data validity issues, things that are not necessarily technically correct, but consumer harm is very little to non-existent. Where I tend to zero in and find the biggest value is here on our rule dashboard. So this is where you can drill down. You see all the individual rules by category that were triggered. We show you the number of accounts that triggered this rule, again broken down also by the high, medium, and low impact. So I'm just going to illustrate to you how a user may review this. I'm going to zero in on this rule 13A. And this is a good example of how two different data elements are compared within the Metro 2 file. So here is a rule that examines account status and amount past due fields. So what exactly does this mean? Notice that when I clicked on that number over here in this accounts with discrepancies, we've now populated a list of the accounts and the data fields with their values that triggered this rule. If I scroll over here, you can see the rule rationale, which is telling us that the account status reflects some stage of delinquency, yet the amount past due is 0, which obviously isn't logical. Now, rather than trying to scroll through this full list, which is rather lengthy, almost 9,800, I'm going to navigate to another dashboard that makes it a bit easier to start troubleshooting this discrepancy. So in our rule details, when I first navigate to this dashboard, we display all the rules associated with the run of the file that I'm examining. But I'm going to go over here. Actually, I had already done it, and I zeroed in to select 13A. And so what this is showing me is all the different combinations of account status, and in this case, all of the accounts had a 0 amount past due. And as I scroll down here, you can see that the majority of the discrepancies occurred within account status values for conditions such as voluntary surrender, merchandise repossessions, and unpaid balance reported as a loss or charge-off. So obviously for any of these plus the account statuses above, we would expect to see a non-zero amount past due value. So how would you act on this? Well, what I would do is take this, go right to my source system, zero in on the accounts with these different situations, and try and determine what's going on. Probably engage a programmer to look at the code that generates the Metro 2 file. Is it erroneously zeroing out the amount past due, or not picking up the data element as it should be? If I go back to the rule dashboard, I want to show you another type of rule that we have in the system. And that is a month over month, or what we affectionately refer to as MOM rules. What the month over month rules do is identify situations that as an account is reported 1 month or one cycle after another, where the progression of data doesn't quite make sense. And so for this one, I just happened to select a rule that is looking at the highest credit or original loan amount field that changed from 1 month to the next for trade lines with an installment or mortgage portfolio type. For those portfolio types, we would expect that amount to remain the same. So again, something to go investigate. Now, it's possible that some of these rules that get triggered are not necessarily an erroneous condition. It may be something unique about a portfolio that was processed through here, but nonetheless, they serve as a really good trigger to go and make sure data is really being generated appropriately. So just real quickly, I'll show you two other dashboards that we provide before I jump back to our presentation. This is a really interesting one in that the occurrences dashboard shows you a distribution of the number of rules triggered per account. So what you're seeing here is a fairly normal distribution in which we see the majority of accounts trigger only one rule, if they trigger any at all. When I see something like this, my eye immediately goes to the high side, and I want to know what's going on with the account that triggered 6 or 7 rules. So I can go ahead and select on that, pull up the account number, and start examining all the rules that account triggered. And of course, I would then jump to look at my source system or system of record to understand what's happening. And finally, the last dashboard I'll show you is that we also show a complete list of all rules that triggered for the file, again, that is being examined, and allow you to sort this in several different ways. This is showing you similar information to what appeared on the rule dashboard, but this time with the rule rationale clearly in full view. You can run multiple files through this. As you can see in the upper right-hand corner, I had multiple demo files for the purpose of this example. And I could deselect any one of these to zero in and just look at the contents of a particular file. Understanding we're on a bit of a web delay here, I did not want to move around too much, but hopefully this gave you a little bit of a sample of one approach to data validation. So how has the data quality scanner helped and been used by those who have implemented it thus far? Well, since we introduced it last year, we have scanned hundreds of millions of trade line records. Our clients who have implemented the data quality scanner as a routine control within their total validation approach have been able to proactively improve the accuracy and quality of the Metro 2 files that they are transmitting to the CRAs, in most cases by evaluating their files prior to transmission. Now, this chart demonstrates the actual results that one of our clients experienced over their first 7 months of usage of DQS. DQS implementation has allowed furnishers to use the tool really in several different ways. One is what I just stated: process monthly files, get a baseline measurement of data quality, and also triangulate those results back to a review of disputes and complaints in the error reports from CRAs to help prioritize what to work on first. It's also used, very importantly, as a part of regression testing to confirm that the source system enhancements that are routinely made work as expected and do not inadvertently break another part of the reporting process. What I did not show to you in the demo, but is demonstrated by this chart here, is we also provide month-over-month trending graph reports. And these can be used to communicate progress both within our client organizations, as well as I know some who have shared it with their external regulatory examiners in cases where they had previously self-identified some issues. And it's also a great way to prioritize. If you come out with a number of items that need attention, you know, IT resources tend to be very valuable resources, not always readily available. And so using the output of this can help direct them to focus on the most critical issues. Now, Matt spent some time talking about recent court actions and relevant laws and interpretation, and I've just gone through some perspectives on both how that translates into operational expectations, as well as some best practices for disputes management and data furnishing quality. I'm now going to speak to 3 specific actions that you could take away from this today to strengthen consumer reporting compliance in your organization. Consider this your homework. The first one is to take a look at your current reporting validation process. We advocate an 8-stage approach split between the left-hand side, which are the pre-transmission activities, and the right-hand side of post-transmission activities. Stage 1 is really something I've hinted at several times now, which is, if possible, before you transmit data to a CRA, examine that file to identify any discrepancies and any significant changes from previous months that could point to a new issue. If you can't do this before you send the data to the CRA, then try to do it as quickly thereafter as possible. This first stage is where our clients have implemented the DQS for Metro 2 file review. Stages 2 and 3 really go together, which is first have a full data mapping and conversion document that provides an archive of how you are producing all files that go to all CRAs, and then make sure that those are reviewed quarterly or anytime your source systems change. Stage 4 pertains to the testing process. So we advocate that you should test the consumer reporting process or the generation of the files to the CRAs as part of a standard suite of regression tests for all of your source systems. And this is another stage in which we have seen the DQS successfully implemented. Moving to stage 5, that's a very simple, make sure that what you sent is what was received by the CRAs. Stage 6, we advocate that you utilize what are really great tools from the CRAs in the form of their statistics reports, also known as reject and error reports, and act on those in a timely manner. Take advantage of scheduling annual data audits in Stage 7 with each CRA, as these can provide valuable insights into how the data you furnish to them is translated for posting to consumers' individual files. And finally, in Stage 8, another take advantage message is that there are tools that some of the CRAs freely make available so that you can review how individual trade lines you furnished were interpreted and follow up with them to address any discrepancies. Now, this may seem a bit onerous, but there's lots of opportunity for automation here so that you don't need as many manual controls. The key message I want you to take away from this first action item is that validation of your data needs to occur at various points in the journey that your data takes. It starts with the source system that generates files that you furnish to the CRAs and culminates with your review of how that data was interpreted and posted by the CRAs. Next question. that I'll ask yourself. It's not a poll. Do you have all the necessary preventive, detective, and corrective controls in place in your consumer reporting compliance organization? Do you have a dedicated consumer reporting compliance team? Now, this may look complex, but it's essentially the components of a control management system or framework. We recommend that you review your existing CMS in your enterprise in consideration of specific needs to address consumer reporting, disputes management, and usage of consumer reports. Now, I would urge you, don't get alarmed. I really think that this is a good news message, as most of you participating today likely have these components in an enterprise CMS, and you really just might need some special attention and resources to focus on the needs specific to consumer reporting compliance. And finally, our last homework question and assignment for you today. When was the last time you took the magnifying glass to review your disputes process? Think back to what Matt talked about earlier in this session and ask yourself, are we conducting reasonable investigation in terms of examining all information provided to us for a dispute? Take a look at your controls. Are these adequate for monitoring and ensuring appropriate execution of your defined procedures? Examine the incentives, the performance metrics, and the compensation structures for your agents involved with processing disputes. We advocate that employees should be compensated based on factors including things like customer satisfaction and processing accuracy versus just getting through their daily queue volume. And don't forget about the impact of overall root cause resolution that should be baked into their job description. Procedures ensure that you have a routine in place to review and update them on a regular frequency. And finally, have you reviewed your disputes process from the customer's viewpoint? Is it easy for customers to contact you and provide information to help their cause? Does your staff view customer communications as something that just interrupts their day, or more so as an opportunity to interact with and educate consumers? Now, unquestionably, all of you involved with consumer reporting and disputes management have a good amount of risk to manage in your operations. We suggest that you can successfully manage that risk by taking constructive actions, or in another manner of speaking, do your homework, and keep in mind some of the core themes that we were promoting today. First is consumer reporting and disputes compliance is evolving. It is not a one and done. It truly is a journey. The environment in which we're operating in this space is always shifting, but success means that you are agile and stay on top of those shifts. The need for accuracy, control, and improvement is only increasing. The furnishers who have enhanced what they are doing over last year are further along than those who have not made any improvements. A focused and deliberate consumer reporting compliance program is simply a way of life now. And I would ask you to remove the banker's or lender's lens and stand in your customer's shoes. Ask yourself, if you knew absolutely nothing about credit reporting and disputes, would the information that you send to your customers in the manner in which you communicate with them make sense to you? The furnishers who are successfully driving down their volumes of disputes and complaints are doing this with reasonable investigations, as well as transparency during the process, and seizing hold of those interaction opportunities to educate their consumers. And with that, we'd be happy to take your questions. So Sandy, would you like to review how our audience can do that?
Sure, of course. Thanks, Michelle. So just as a quick reminder, to enter a question through the web conference system, simply type your question into the chat box area at the lower left corner of your screen, and then make sure that you click on the send button to submit your question. So it's as simple as that. Michelle and Matt, I will turn it over to you for the first question.
Okay, let's see. So, what advice would you give us to prepare for a regulatory exam of our credit reporting processes? That's a great question. I'm going to repeat something I said earlier, which is document, document, document. One of the very first things that you're going to see in a request from a regulatory examiner in preparation for their on-site visit is they want to see all your documentation. How are you producing any files that you submit to CRAs? What validation practices have you implemented? What controls do you have in place? What are the procedures and education that you've given to your agents who are managing disputes? And again, the same question comes around, what are all the controls around that? We tend to, when we work with a client, take a trust and verify approach. So you may tell us you're doing something, but show us the hard evidence. And we do that because that's what an examiner is going to say. Great, you have this procedure, but how do I know you're really doing it? So that gets back to the controls, your monitoring, your reporting, et cetera. What is the cost associated with your tool? It's actually based on the number of accounts that are processed, and so I can't give you the exact. It's a range of costs. So I've just flipped over to our contact information. I'd invite you to drop me an email address. We'll also make our presentation available afterwards, and I'd be happy to discuss your situation on a one-to-one basis offline. Let's see. You talk about how disputes and how they are integrated into FCRA reporting. What about customer complaints? So I'm going to speculate a bit on what you're asking here, but certainly what we've seen is, and what we would advocate is, some of the same processes that you have for complaints applies to disputes in terms of tracking them and ensuring that you're doing appropriate root cause analysis. So in the complaints area, it's really key that you have some processes in place that examine the complaint and determine. Sometimes a complaint may come in and it's actually a dispute. So you need to have a process in place to examine that and flip it over to the disputes area when appropriate to dig in further. Let's see, and I see another one around disputes. What is your opinion regarding us having to retain evidence or documentation showing a reasonable investigation was completed? So opinion is you need to retain this documentation. I have worked with clients where we've advocated that they create, you take advantage of an existing imaging system if one exists, or establish a system by which they capture all the information that was available to them at the time the dispute was processed. And by that I mean capture a screenshot of the information from the source system that you referenced to process to render a decision on the dispute. If you made a correction, capture a screenshot if appropriate, a system process that was run, retain copies of all of the customer correspondence involved with the investigation. It goes back to what I said a few minutes ago. If someone came to you 6 months, 12 months from now and said, John Doe dispute on May 4th of 2016 said that he wasn't delinquent, what did you do to either confirm that was accurate or to correct it and be able to show exactly what you knew at the time and how you resolved that? So that's really, could you resolve that dispute 6, 12 months from now, ensure you have that documentation retained?
Hey, Michelle, one thing I see we've got some questions in about getting copies of the presentation. So just to address those out to a group, and I think some have gotten the chat responses to it, but we will be following up in the coming days to share the presentation out with the folks here, using the emails that's used when you're registered. So you're absolutely happy to follow up on that.
So I see another one. What kind of processing time can we expect with a full file compare before furnishing data to the CRAs? I'm assuming this question may pertain to what I showed you with the data quality scanner, so I hope I'm answering the right question. The the processing time can be minutes, or if it's many, many millions of records, might be an hour, but it's actually very fast. And a lot of that is also driven by the equipment on which it is installed. It's an application that can be installed at your site or hosted by Bridgeforce. So again, if there's a keen interest here, happy to discuss that in more details to understand your volumes. But I'm personally involved in a lot of our trial runs, and some of the files we process really are done in just a few minutes. So,
I'll also suggest
the
category. The category. I've seen a few questions come in that I'll say are fairly specific and legal in nature that I think would probably be best for those of you that have some of those sorts of questions. Please go ahead and submit them, and we'll capture those down. And in the interest of the time here, and as I mentioned, this was a bit of a condensed version. I think on some of these it would be great to pull in some of the folks from Bridgeforce Law that have dove quite deeply in this, and I'd be happy to follow up, shoot an email to either provide a direct answer in some cases or maybe offer up a brief conversation may be the best way, because I'm looking, several of these questions are ones that I don't think are well answered in 30 seconds, or at minimum are not well answered in 30 seconds by me.
I concur, Matt. But I think they're definitely worthwhile to follow up on, and so we'd like to be able to get those answers to you. I see one that says, if we determine reporting is accurate when investigating a dispute, how much detail is required in response to the consumer? This is one where there's not an absolutely defined answer, but here's what I would recommend. Give the customer enough information to understand why the reporting is accurate. And I'll go back to what I said a few minutes ago. If most consumers, all of us in the business, we tend to get really immersed in this, and so understanding of credit reporting and disputes and all this is really second nature to so many of us. But think about, some of your relatives or friends who have no clue about how this works, and look at the letters that you send today. With the information you're sending to the consumer, really help them understand why it's accurate. So if you're saying, hey, we reported your delinquency correctly, I would take the step to say, yes, we reported it as delinquent because your payment that was due on March 1st was not received until May 15th. If all you said to them is, we reported accurately, end of story, chances are that could come back as another dispute. I also advocate picking up the phone if there's a question, if a customer hits you with a repeated dispute. I offered this to someone a few months ago and said, pick up the phone and just talk to them. They may not understand that, hey, they incurred all these late fees and they still owe this money, et cetera. So I would not shy away from having a conversation with the consumer. Your reaction may be, Michelle, that takes a lot of time, and yes, but that one conversation could save you from processing a repeat dispute 3 or 4 times. Sandy, I know we're approaching the end of our time here, so I'll just go ahead and say a few closing words. Hopefully those of you who participated today, got the sense from the discussion that Matt and I had that, at Bridgeforce, we're rather passionate about consumer reporting compliance. We have invested a lot of time and work to help our clients and partners in the industry. So we remain on the cutting edge, and we think we understand the bigger picture, and we'd welcome the opportunity to engage with you offline if you wish and talk about, share some of our insights to ensure that your consumer reporting compliance journey is a safe and sound one. And we thank you for attending.
Great. Thank you so much, Michelle, and to Matt. And with that, we must conclude today's program. As we mentioned, this session has been recorded. You can access the recorded archive by using the same login information that you used for today's live webinar, and that will be available within the next few days. On behalf of the Consumer Bankers Association, thank you to our speakers and, of course, all of today's participants. Have a good afternoon, and you may now disconnect.